Welcome to the daily update, where we'll go over the action in the market for Monday, January 24th, and then see how things look for Tuesday, January 25th. It was quite a day, and I'll get heavily into that here in just a minute. I'd like to start off with just giving an announcement. This is free and no obligation or anything like that, but as I participate in different Facebook groups, especially private Facebook groups, to a large degree, I find that I'm really the only one participating with any regularity. So I've decided to go ahead and set up my own private Facebook group. I plan on starting this February 1st, 2022, which will be next week as I record this. It is free, but it will be moderated. We don't want to get off on different little tangents. We may talk about some different markets, but mainly we want to draw everything back to how does it focus on the stock market and particularly the S&P 500. So there's, of course, no self-promotion. If you also teach classes or have some kind of a program, especially if you're involved in the Forex market or the cryptocurrencies, I get all kinds of spam junk from them, and I want to eliminate all of that. We want to keep things focused on the S&P. We want to avoid politics as well. I have very strong opinions, but you won't know what those are. We're here to talk about the stock market. We want to talk about things that are happening and take them for what they are, not whether we agree or disagree with those things. If you watch very many of my videos on YouTube, you'll notice that I kind of take both sides. Even though personally I have a stance, as an educator, I shouldn't be indoctrinating people. I should be letting people develop their own conclusions. Well, this is not the place for that when it's political. So we avoid that in this room. We want to have spirited and lively discussions. I want it to be a free place where you can ask questions. Maybe you have some feedback that you want to give me concerning these videos and other things that I do. There will be a chance for Q&A, and I can even easily do live broadcasts. We can get together at certain times. We can, sorry about that. I'm battling something with my throat, which is really great for making these videos. We can go live. I can record these if you're not able to watch them. Really, the people in this room are going to dictate what happens. So let me know what you think. If you want to be involved in this, and if you, probably the best way to contact me would be john@spxinvesting.com. I do have a website, but it's down right now. I am on Facebook, but there's more people than just me on Facebook. So probably what we should do is just have it more of a direct contact that way. So just let me know what you think, if this is something that you would like to participate in, and I'll have some videos there and some instruction available that you might find useful. Okay, so let's get on to Monday's session. We had a negative open. Over the weekend, I watched a lot of videos, I read a lot of articles, and pretty much everybody was either anticipating or at least hoping for a bounce. Well, that didn't really materialize. When you've got everybody talking about something at the same time, the opposite tends to happen when it applies to the stock market. So there was renewed selling. The doom and gloomers were very happy with things. Those people that were long were not so happy. But midday, as the day went on, we did have really intense selling, but right at about 42.22, just around that level. And I can't really figure out, I looked at the other indexes. The only thing that I could see that was providing some kind of a support was that the VIX got really high. And people were starting to use that as justification for going long. But all of the different indexes kind of turned at a level. It wasn't at a moving average. It wasn't really at a pivot point. It wasn't really being influenced by another market. It just kind of turned, and then the buying really started, and we took off and were able to rebound and drive prices quite a bit higher going into the close. There was a lot of momentum into the close, and we ended up closing near the high. So if you look at this on a chart from one day to the next, yeah, we were only up 0.28% on the S&P. But if you look what happened during the day, it could potentially be positive. However, on our daily charts, we're still showing both short-term and intermediate-term downtrends, but the long-term trend continues to hold up. Volume was above average, and I forgot to take expiration off there. And what we're fixated on now is a continued look at the charts. We have weak technicals, and I'll go through those. People were hoping for a bounce on Monday. Well, it didn't happen right after the open. It happened later on in the day. And it even caught a lot of the financial media off guard. They were all geared for, here we go, end of the world. It's all over. Things are terrible. Well, all of a sudden, things started to turn a little bit. Now we'll have to see, is that going to continue? We're still in the middle of earnings season. We still have inflation that we're dealing with. We still are watching interest rates, but they didn't really play that big of a role on Monday. And of course, the geopolitical concerns between Russia and Ukraine. These are all things that the market's freaking out about. And I didn't put that on this chart. I will add it tomorrow. You have the Fed meeting and then the press conference after that, which the market will be heavily tuned into. So what can we say? We had broad-based selling that continued at the open. We still have a pretty negative environment. If this is an actual rebound, it needs to get some legs from here. We were able to regain the 200 exponential moving average on the S&P. Interest rates weren't really a factor in the rebound. And right at the time I started recording this, Asia's just getting hammered right now. China, Hong Kong, Tokyo. And that's pulling the S&P overnight futures down right now. And we're down over 1%. Now, we were down pretty heavy Sunday night going into Monday. So we'll have to see, is this going to rebound? How is Europe going to look? The US does not typically follow these markets unless it's something really, really big. The US tends to lead these markets. So we might have a weaker open, but we might see a recovery from that if the US wants to take control and continue with this bounce. We are currently overvalued and we have a negative trend with the bias still remaining negative, although possibly looking a bit more positive. So let's look at the day. First, sentiment, we are showing a bit more fear, although it's not extreme right now. We've seen it go way over to the left more when we've had less significant declines. This one just kind of got out of control and started going pretty fast to the downside before people had a real chance to react or see it before it even happened, which most people don't. But it's been pretty intense. It may continue. We have to see where we go from here. Then, as far as our fear and greed, we're just about in the middle. We're fairly neutral overall. Then I added another part to this chart. I've been showing just closing prices for the VIX. Well, I was watching this and I was noticing other times when the VIX got really high, at about the time we saw a rebound, and I'm going to make this bigger because when the VIX got really high, yeah, we spiked up, but then we ended up closing near the low. Well, the same thing happened on Monday. The VIX just really spiked up. And this is maybe when traders decided to get in and start buying because we haven't been this high in quite a while. Well, we didn't close right at the low for the VIX on Monday, but we closed in near the low. There was a great move back to the upside as far as the fear gauge is concerned. So that could be positive. We didn't see that in other times before. We didn't like the look of the VIX. I'm going to start including this, but this was about the only thing I could see that was really generating some buying enthusiasm. So look at the sectors. Some of them were down, some of them ended up being up, but for the first few hours the market was open, everything was down. All the sectors, all 11 were negative. Well, we saw a bit of recovery in utilities and consumer staples, which again are more value plays, healthcare, materials, real estate. the financials, then even tech saw a bit of a rebound on Monday and so forth. The ended up having 8 out of the 11 sectors finish positive on Monday. So going from all 11 negative to 8 being positive, that's a bit encouraging. And then we're still showing that energy is leading the way right now. And the staples right now, is that staples? No, discretionary. Sorry, I get these colors all mixed up here. The colors kind of are confusing sometimes. The discretionary are still down, but saw a bit of recovery on Monday. As far as inflation, we're still looking at the BDI and the jury's out with that. It's continuing to decline. As far as Fed Watch, we're pretty much at a certainty now. 94.4% is about as certain as you can get in the financial markets that interest rates will not be changed on Wednesday. You still have a few people holding out, just, these little, they have their little theories and their little algorithms and their ways of looking at things, and they still might see something that pretty much everybody else is not seeing. But we kind of go with the consensus on this. We're looking out, we're still seeing a pretty high probability that rates will be raised in March. We're about even with May, and we're looking more into June, and that is working itself out also. A lot will probably be said tomorrow with what the Chairman Powell says in his press conference. Okay, technical alerts, we've got a whole list. If they're highlighted in blue, that's positive. If they're highlighted in red, that's negative. I had to scrunch this down pretty small just so people could see this. But one thing that was positive is that the dollar, the MACD, did have a positive crossover. The NASDAQ was able to climb above 13.8, and the S&P got back above 4,400. The rest of these were all negative and generated typically earlier in the session that day. So we have a lot of damage that's been done. Things aren't turning on a dime here, but there is some encouragement if you're looking for some kind of a rebound, or maybe to go back into a neutral, non-trending environment. So we gapped lower, and that was pretty discouraging right off the bat. We dropped down a couple of times and we hit a low right around 42.20. And then we were able to see some buyers come in. We saw some initial weakness. It came all the way back up to, what was this, S2. I actually had S3 on the chart, but we didn't go down that low. So it doesn't register up here. I put a line across at that level, but we didn't go that far down. What was possibly encouraging was the professionals closing the market, and we saw some real buying coming in, and right near the close, we actually switched into positive territory. Then on our daily chart, really not much to update here, other than we're back above this level where we had broken down. We actually exceeded the low set back in October, but we were still able to come back up and close slightly above that. And we closed just above S2 on Monday. We're down currently a little over 8% right now. We're not quite into correction territory. The financial media was going, oh, the S&P hit correction territory. Well, it did for a while, but then it closed out of it. And the NASDAQ is close to bear market territory. It's been down almost 20%. Then we saw a little bit of a tick up in the growth stocks versus the value stocks on Monday. Then as far as our trend, yeah, we're still trending and we're still negative. But this could be encouraging since we were so low and came back up to close right near the highs. If you are long or bullish in the market, you might find some encouragement from this. Doesn't mean we won't continue down. We'll just have to see how it plays out. But the red line on the ADX is pegged pretty high right now. That just suggests that the selling has been overdone. As far as our breadth, we were positive based on price, but still negative based on volume. Things continue to roll over that way. The ratio had a little bit of a tick up. with the positive close. The new highs and new lows continued to show deterioration. As we fell down, we had a bunch of new lows that were created. We'll see that on the BPI chart as well. So this overall continues to be negative. Short term, we're well below the 20. The 20, both 20s are rolling over. Our moving average study, we're still in negative extreme territory on the 20. We went a little bit sideways with the 50 and a little bit sideways to a little bit up on the 200. Our moving averages, this just shows that we were able to get back above the 200-day exponential moving average. We haven't recouped the simple moving average yet. The MACD is negative and pretty extreme. The Swinland short-term oscillator, trend oscillator, it turned just a little bit, but is still pretty negative based on price and volume. The McClellan oscillator had a little bit of a rebound after being pretty extreme. The Stochk RSI is still pegged at the bottom. It needs to see a little more for it to move. The rate of change 5 period, it went a little bit sideways, but it's still extreme negative. The 10-day saw a little bit of a bounce, but is still extreme negative. The 20-day also, it declined just a little bit. And the 50 saw a little bit of a bounce on Monday, but it's still extreme. And the 200 continues to fall. We're going to have to see a lot more follow through for these indicators to show some improvement. Standard deviation, we're still pretty high, but it could still go higher to the downside. The percent B, yeah, we were getting right near the edge of the bottom Bollinger Band. Well, with the slight recovery on Monday, we saw a little bit of a turn up. Intermediate term, we're pretty much negative still across the board. We need to see a lot more before these charts start to show improvement. So the 50 is negative. Our PMO continues to be negative across the board. Also, price and volume are negative. The other PMO study, yeah, we're still pretty negative across the board on this chart. The BPI, because we went so low, a lot of new point and figure sell signals were generated. So we had a pretty low reading from that, but that is pretty extreme. Our rainbow that we have here, yeah, we're slicing through that, but we're coming back up a little bit. We're going to need this to really bounce up out of this if we're going to maintain this pretty little rainbow look. If we start to go sideways or continue to go down, these moving averages are going to start to roll over and look more like a ribbon. Stochastics are showing a bounce short term, a little bit of an upturn intermediate, and still going down longer term. The vortex, not anything real different. We're still negative and not necessarily showing an extreme reading. Although to the downside, we are seeing the green in more extreme territory. Summation index, because this is a longer indicator, it's negative based on price and volume. And then all of our momentum oscillators continue to go down, and some are showing some extreme negative readings still. The CMF, the Chaikin money flow, it rebounded a little bit, but continues to be negative. CCI is also pegged in oversold territory. The Williams percent R, which I might want to even start including this as one of my short-term indicators, because this thing really bounces around. But with the slight upward close, that came up out of negative oversold territory. The ulcer index is still starting to register pretty high, both short-term and then in a longer-term context. The Copic is still headed down. Takes a lot for that to turn. This is a really good indicator for finding bottoms. It's not really good for finding tops. But we need to see some more follow through for that really to start turning. But we're showing a pretty extreme reading right now on the longer term chart. Then the boom, yeah, we're extreme pretty much across the board right now. So we're going to have to see, again, some more follow through. The Shand trend meter, it blipped down a little bit and we're into pretty oversold territory. Then the RSI, it had a little bit of an upturn. Slope, yeah, it continues to roll over. And the special K, the breakfast indicator, longer term, we're seeing this cross below the moving average for the first time since the COVID plunge. That's something to keep in the back of your mind. Then the ultimate oscillator, it bounced up a little bit on Monday. And this is a little bit longer term, just to give us some perspective. We hadn't gotten this low since the COVID plunge. Then here, this is the Chaikin money flow. And I don't have a label on this. This is just another oscillator that I look at, but it had gone down to an extreme reading and then bounced back up. I'm sorry, this is the Shand oscillator. I'm going to have to put a label on this one. Sorry about that. Elder continues to be negative with a slight turn up in the MACD. The SAR continues to be negative. And it will be, and so until we see some kind of a real significant upward move. Some of our different charts, the Heiken Ashi chart continues to be negative, but showing a little bit of improvement since we came up off the lows. The Kagi chart is still negative. The Renko is also negative. The 3-line break, it's still waiting to decide where those 3 lines and then the break is going to be. We'll have to see if it redraws, if we get a bit of a continued rebound. Equivolume, this actually had a green candle because we finished up. So that's pretty positive, even though we're still showing pretty negative readings with the ease of movement indicator. The Ichimoku cloud, yeah, we're still below that, and the cloud itself is starting to roll over a bit. Point and figure did draw another 0 on Monday, but this could potentially be positive. We still have a longer term uptrend. Our long-term chart that I look at, the S&P and the equal weight S&P are pretty much going hand in hand right now. Looking at the broad market, the S&P was down but finished at or near the highs. The same thing is true with the mid caps and the small caps. So we saw pretty much an across the board rebound, which could be healthy. And this is just the longer term chart of these 3 indexes. Bonds continue to underperform stocks, even though we're seeing a slight upward movement in this indicator. Then here's the FANGs. Yeah, just got hammered on Monday, but didn't close at the high, but did see a good solid rebound. The same thing with ARK. We're up about 2.32%, 2.82% on Monday. So that saw a bit of a rebound as well. The Dow, same thing. We actually closed just about near the high with the Dow. You could say that we got close to S2, but we didn't quite hit that. But we have not regained any of these moving averages yet, and we haven't regained S1. Here's just a longer term chart of the Dow. Not really telling us much as far as Dow theory. The Dow blipped up a little bit, same with trannies, and utilities saw some weakness on Monday. Here's the small caps. They had just been getting hammered too, but they closed near the high on Monday. And you don't see as much of a downward movement as you see in some of the larger indexes. Same thing with the mid caps. We did get down to S2. Now, I can't really see the mid caps as being what everybody looks to in the market, but on a technical basis, it was really the only index that got down to any kind of a support level. And then we bounced up off of that. Then the NASDAQ, it's got a lot of work to do if it's going to go back positive. Then the NASDAQ 100 also closed near the high. And I also have, and I just love this. This is called the Vixen. Isn't that a great name? Where this is the VIX on the NASDAQ 100, where we're seeing kind of the same thing. Let me make this a little bigger, where we had really spiked up over 44, and then we came down and closed just about at the lows for the fear gauge. So when we're seeing that with the S&P and with the NASDAQ 100, that could be positive. Then the NYSE, we're right back up about to S1. Wilshire, again, finished just about at the highs, and the longer term chart, which it's kind of hard to make anything from that. I just include these for some perspective. All stocks continue to fall overall. Looking at some of the world indexes, China, which is just getting hammered right now, its overall trend has been positive. Emerging markets, which are having a difficult time right now. Europe, will have to see how that opens, but it's rolling over a little bit. Japan, which is also getting hammered, is rolling over. And then we're still seeing the rollover in the S&P. Broad market, copper continues to go sideways. The dollar had a pretty good day on Monday. It was actually above 96 for a while, but we closed at 95.90 right there. Then on the weekly chart, this is just starting a new chart, so we're slightly above the moving average on a longer term basis. Lumber fell a little bit. Again, there's a joke in there somewhere. Oil had a bit of a down day on Monday. And then gold, everybody's just screaming about how it's breaking out. Does this look like a breakout to you? I look at even the futures contracts for gold, and I'm not seeing any kind of a breakout. But we're just treading sideways right now. And then silver, yeah, it went right up to the 200-day, and it just got hammered again on Monday. So it was down over 1%, 1.21. The CRB was down a little over 1% on Monday. So we saw money going into stocks and coming out of some of the commodities and precious metals. Then oil came down a little bit. The S&P was up just slightly. The dollar has been going sideways. Bonds were down a little bit. So interest rates were up slightly, and then gold is just kind of floundering around still. Then I have the Bitcoin chart here. It's really having some trouble. It's rebounded since this. This chart is an end of day chart. And so I'm going with basically New York prices on this. And there's action that happens in the evenings and overnight and on the weekends even that really doesn't get picked up by this chart. But one thing that I did notice, in the video for Monday, I talked about this big head and shoulders top potential. Well, as I was looking at this chart, I noticed we have another smaller head and shoulders right here. Here's a shoulder on the left, we have the head, and then a right shoulder, if you interpret it that way. And that could explain some of the fall that we're seeing. Where this could really get ugly for Bitcoin is if we drop really below 30,000 with that. And that's all I do. I just talk about it. I don't tout it. I don't say, hey, I've got this great guy on Telegram that's I'm up this much money. I get all that crap sent to me too. No, but we do want to pay attention to this just because it's become a real focal point for things. As far as bonds, we saw a little bit of an uptick across the 30. The 10 was sideways, a little bit of a decline with the 5 and with the 2. And then we just look at the overall interest rate curve. Then internationally, a little bit of a decline in the US, as well as the UK, Japan, and Germany, which is still staying negative. Bonds overall are still having a lot of trouble based on price, which is pushing the interest rates up. So our economic calendar, let me make this bigger here. These were not real market movers on Monday. We had the market manufacturing PMI. They expected it. Let's see, I didn't fill this in correct. Okay, it came in at 55. So it was a little bit lower. on both of these numbers. I used to pay more attention to this, but it doesn't seem to have as much influence as it used to have. And then, so what is our outlook after Monday? Overall, this should say Tuesday right here. Sorry. The overall downtrend is still intact. We'll see possible continued buying, possible if the momentum continues. But again, we're really negative right now in the overnight market. And we're bouncing up potentially off of a short-term oversold condition. We have the Fed meeting on Wednesday. Earnings season continues, and we still have to worry about what's happening in Russia and Ukraine. So our conclusion is that we are still in a downtrend. And this should also say Monday. My goodness. The short-term trend, the bias is negative, but we may continue to bounce from being oversold. And that may be all it is a dead cat bounce. We might just bounce a little bit, rest for a while, and then start screaming more to the downside. If we're going to see the climate change back to positive, there's going to have to be a lot of buying coming in and a lot of catalysts that are going to cause people to want to jump back in right now. Intermediate term, we're negative and it's becoming more and more oversold, but the long-term bias does remain positive. So thank you very much. Have a great day, and I'll talk to you again in the next video.